I want to start with a few comments, if I may, about the global economy and our position within it. As you know, the Finance Minister is due back late tomorrow from his visit to the United States, and where he's been talking to various people about the global outlook. I'll get a full update when he gets back, but I did have an opportunity to have a chat to him over the weekend, and it's fair to say he characterised the mood as very dark. There is genuine fear that both the United States and Europe could be in for a tough time in the next 12 to 24 months. As the Reserve Bank Governor pointed out last week, the volatility in Europe and the United States is likely to reduce global growth. We are not immune from the current issues with the US and Europe, but New Zealand's position relative to many other economies is not all doom and gloom by any stretch of the imagination. This government has a plan to get our deficit and spending under control, and it's a plan we've been implementing since we came into government. You will remember where we started when we took office. It had, if nothing had changed, we'd be facing never-ending deficits and ever-rising debt. This year it is likely that we will see government borrowing substantially reduced from around about $20 billion to $5 billion, despite the Canterbury earthquakes, and reducing further in the coming years. The actions we have taken to get the country back into surplus as fast as possible is not only the right course of action, it's the only sensible course of action available to us.
About the very dark times in Europe and America.
Yeah.
Have you received any information that you will have to revise downwards or economic growth and job growth?
Well, nothing other than when I met the Reserve Bank Governor last week, as I do from time to time. The indication that he had at that point was that global growth will be reduced by about half a percent. So I think it's going from 3.7 to 3.2, something like that. So, I mean, generally what he was saying is it will have some impact on New Zealand, but at this point it's not significantly material, so it has an impact. But I mean, of course, in the end, the United States is a third of the global economy. Europe is a huge trading powerhouse. So if those economies are weaker for longer, that has an impact on New Zealand. The lucky part of the story from New Zealand's perspective is that Asia has been emerging very strongly. It's so far been somewhat immune to what's happening in the United States and Europe. And if they can remain strong, and the indications are that they'll continue to grow between sort of 8 or 9%, then that's very good for New Zealand. I think Mr. English met with, I think it was the Chinese finance minister when he was in Washington, who again was optimistic the Chinese economy would continue to grow at those sort of 8 to 10% levels.
Those numbers that the Reserve Bank Governor referred to, presumably they're on the basis of what happened already.
Correct.
Do you have any advice or any indication of the impact of, say, a default by Greece on the New Zealand economy?
No, but I mean, I think the issues of, one thing that the Finance Minister said to me is that his impression is, unlike late 2008, early 2009, where there was significant stress in the financial markets and the funding markets effectively closed. They closed to New Zealand, they closed to most countries around the world. The situation is far more discerning now, so it's particular institutions and particular countries that are much more badly affected. So there's some impact on liquidity, but it's not wholesale. From New Zealand's point of view, I mean, we borrowed $20 billion last year, a big chunk of that for the Christchurch earthquake. This year it's $5 billion, and we've largely pre-funded ourselves. So we're in a vastly different position. I mean, I still think our corporate balance sheets are much stronger. We're in better shape in terms of commodity prices. So, I mean, look, we're not immune from what's happening in the world, but most countries would trade their position with New Zealand and take our position any day.
What's your reading on the likelihood of a default? I mean, Mr. English has been there, so presumably he's had the word on the ground. Come away with very, very gloomy outlook by the sound of it.
He didn't offer a view on the call yesterday, but I'd say better than 50%. Yep.
Because today there's an interview with Angela Merkel on the wires where she's indicating that once the rescue package, for want of a better word, is put together, the extra funding that the ECB will have available to it, once that's put in place, that she can conceive of a situation where there could be a default.
Where there could be. Yeah. Well, I think it depends on how.
The question is that what they're sort of getting ready for?
Yeah, I think so. I mean, because it depends on how you define default, but I mean, they could take a position where there's a huge chunk of bonds that Greece has borrowed, where essentially there's no chance of repayment. There's a freeze in any coupon payments that are made, and a haircut is made to recapitalise those bonds. So, I mean, that is effectively a default.
But your government doesn't think, or English doesn't think there'll be a freeze on wholesale finance?
No. I mean, the markets are still open for us. We borrowed money last week.
But if Greece would default, that would seem a shock.
Well, it's certainly not good for confidence in the global markets, but as I've said, I mean, the general view he has, it's much more discerning this time.
With a better than 50% chance of default,
Yep.
shouldn't you be asking for some advice, or shouldn't Treasury be giving some advice about the impact of New Zealand?
Well, we can probably go and get some advice. It'll all be subjective. But, I mean, I think the important point is a lot of that's very heavily priced in the market. I mean, the markets are anticipating, I mean, one of the sites I was looking at was anticipating a 90% probability of Greece defaulting. So this isn't new news. I mean, whether it does or doesn't, I'm not the technical expert in those matters these days, but there is a reasonable chance that they will, and we'll see how it goes.
Back on the economy,
Yep.
Wayne Swan today, this morning I
Yep.
think, said that the world economy is making it much harder for Australia to hit its target of,
Yep.
of returning to surplus by 12-13.
Yep.
Your comment on the situation in New Zealand?
Well, I haven't been advised that there's any need for us to change from our current position, which is 14-15. We've quietly been hopeful that we might get there slightly earlier. That might now mean that that's not possible. We're at 14-15 again. I mean, in the end, we've just got to work through the situation as we find ourselves. I mean, one bit of good news, I guess, for New Zealand and Australia at the moment is that the exchange rate's falling. That's helping our exporters a little bit. Obviously puts pressure on other areas, but in Australia's case, I mean, they've had quite a significant devaluation actually in the last few days. I mean, so have we, but I mean, they were at 110, I think at one point. They're at 97 cents now.
Mr. English apparently, when he was over in the States, said that in a general sense, governments would need to trim back their spending a bit and perhaps bump up their taxation a little bit more.
Yeah.
Would you say New Zealand's anywhere near coming into that camp, particularly on the taxation side?
Well, I think we're happy with what we're doing on the tax side. I mean, the structure of the tax system and the integrity of the tax system is critically important. I mean, you wouldn't want to play around with that unless you ultimately needed to. I mean, our main concern about the sort of proposals that Labor put up is that they fundamentally alter the integrity of the system, and we think that the bureaucracy involved in administering things like GST or food mean that they rule those policies out. And that was the long-standing view of Labor, and that was Phil Goff's view when he was on the committee that looked at introduction of GST in New Zealand. So, I mean, I think it's a policy you might want to take to the election when you're behind in the polls, but it's not practically a policy you want to implement. Because if you want to take GST off fruit and vegetables, why wouldn't you take it off meat and milk? And the bureaucracy and the administration of that will be enormous. So I don't see us, advocating significant changes in tax. In terms of spending, we are being very careful. I mean, we've cut our new budget spending allowance to $800 million. We've had a number of budget ministers' meetings already, looking at making sure that if we're returned as the government, we hit that target. So we're very focused on that.
Do you stand ready to make any changes, any specific ideas for any changes if things do turn to custody in Greece or elsewhere in Europe?
Well, the government always has to respond. I mean, when we came in back into 2008, you'll remember when we got the PREFU, just before the election, there was a picture that was substantially deteriorated from budget time. As soon as we became the government, Treasury felt the numbers were so badly out of date within that 6-week period, they presented a new set of books, and ultimately we cancelled the tax cuts that we were proposing to have in 2009. So you always have to respond as government, and as Prime Minister I've learnt that you do your best to keep your word, but people also expect you to roll with the punches to a certain degree. So there can always be change, but on the information I have today, in good faith, we're promoting the policies we have.
And if we ask you where you might roll with those punches, is there any sort of, are you inclined to sort of think you may have to stimulate the economy or cuts?
I don't think so at the moment. I mean, look, Q2 growth was a little weaker than the expectation or the consensus from economists, but we've grown in 8 of the last 9 quarters. I mean, Q1 was upgraded. The Governor said to me he was pretty confident that Q3 and Q4 would be considerably stronger. We have the domestic stimulus that will come from the Christchurch rebuild, and while it's been pushed slightly further out, it's a very substantial amount of economic activity that will take place. I mean, the exchange rate, if it comes down a bit more, helps us on the competitive side. Commodity prices remain strong. So, I think, from New Zealand's point of view, we're lucky. We're selling things the world wants to buy, and we're in the right part of the world probably for the first time in a long time. So, of course, we're not immune, But we're very focused on getting ourselves back into surplus as fast as we can, paying off debt and making the economy as competitive as we can. In the end, we can only control the things that are within our grasp, and what happens around the rest of the world, we just need to work our way through that. And as Bill English has said, it's choppy waters at the moment, and the waters are getting choppier.
Do you think there could be a global double dip? Range or something?
Yeah, look, it's possible, but I don't think that seemed to be the likely outcome. Most people seem to think it will be, it'll be very challenging over the next 24 months, but not necessarily double-dip recession. But it depends again whether it's a technical recession. Global growth is still predicted to be above 3%.